Hey guys, welcome back to another backtesting video. We are doing Euro Yen May 2021. If you want to know how I enter and if you want to watch the previous months of 2021, then please go check out the videos that I'll pop along. But we're going to get straight into it, straight onto the charts. So I'm using TradingView and I'm using the bar replay tool so we can go back to the month of May. We are on the hourly chart. We can see how price has been reacting. We're currently in a downtrend, and let's just see a little bit more information on how price is going, pushing up now. We are now on an uptrend. So there's potential entry on this inside bar level here. And you can see that we've sort of tapped it, wicked it right here. And now price is moving upwards. Now, what I wanted to actually point out here is the nature of price moving away from this level. However, wicks down here and wicks up here kind of show me that the price still is unsure. Also, if we just look to the left, we can see that price may be reacting off of this zone. As you guys know, I'm slowly trying to incorporate some institutional style trading, and you're gonna see that as we do these backtesting videos more and more. So let's just see what happens next. And we've got a big retrace candle here. Big retrace candle does not give me confidence to really show that we are pushing up, especially when we have wicks either side. The body is the same as the body of the bull candle. So technically, you know, this could be a value area where price may trickle down, but the key thing is trickling down to then potentially move to the upside. However, sometimes I've seen price just completely smash through, not respecting this zone, not respecting this inside bar. And it really does depend on how price moves to these areas and zones that we find. Because it's one thing, you know, noting out areas where we can take the trade. There's another thing on how price moves towards that area of interest or valuable area. Price is trickling, and now price has absolutely wicked into this region here. Now, obviously, we are hindsight trading because we're backtesting. However, you know, realistically, I would actually have, let's say, I would actually have an alert maybe just above this zone just to see how price reacts. Obviously, then I'd be triggered in my alert. After seeing a candle like this, I would not be interested to take the trade. Just personally, with how price moved going up, how price retraced, and then how price is moving towards this area. So let's just continue, and price absolutely blows through this zone. So you know what, that I would call that an invalid trade. What would be interesting is, you know, if we're coming to the downside, this is going to go a bit more into institutional style trading, but we've kind of mitigated back to this region here, and that has mitigated, you know, on the low time frames, there's going to be information within this wick. So that's kind of showing me sort of like selling pressure, selling order flow to the downside. So there could be some sells here, which I would be more interested in than taking a buy in this area at the moment. So if we just continue, current area that could be interesting is either in this area here, or if we get the general flag setup where we come down, make a low, make a high, counter trend, and push up, and we get on the retrace. So we've broken this inside bar high. If we get a retrace, I'll be interested to take the sell. And here we go. Let's take a sell. And I'm going to take the sell here with a 15 pip stop loss. And let's see how price reacts to that. We are not moving our stops until we break this low here. So we basically had our bog standard impulse, correction, and impulse out. This is a very common Euro Yen behavior, by the way. You'll only know that if you actually backtest it. But let's see what happens next. And we will just move our stop to this high. So we'd be running at 1.47 locked in at around just under 0.7%. Will I take a retest? Absolutely not. Guys, this wick is ugly. We are not taking that. Continue. Just move this along. And we've wicked again, got a bit excited there, move to the next candle, but the next high is just on this high up here. And we've locked in about 1.15%. Right, what is market structure telling me? What is nature telling me? Just looking out, zooming out, descending, right? We're breaking, we're retracing, we're breaking, we're retracing, fat wick, rejection wick. So it's kind of, you know, market structure, nature telling us that we could potentially be moving to the upside. So all we really care about is if we're gonna break down this low or if we're gonna be taken out for a small profit. Let me move this over. Oh, and we've been taken out for 1.15. Okay, that is solid. What do I see now? Let's reevaluate. We've got this descending channel. We've got a push up. This could be pretty decent for a short-term buy. Let us see where we are now. So we've just hit an uptrend. The potential area for a retest would be at this inside bar level here. However, I mean, with that wick, absolutely not. Let's just keep pushing price forward. Ooh, getting some pretty decent momentum here. Let's get rid of this. What I like about it is we're coming from this descending channel here, pushed up. Yes, we've had some counter trends, so that would just not make it a high probability setup. Had this wick, but then we had some too strong impulsive movements. And to be honest, where the entry would be for a retest, based off the strategy that I trade, is actually up here. And I'm gonna tell you something now, which is I'm just not interested, because if I was to take a retest trade based off the rules that I've got, let's say price entry would be here with a 12 pip stop loss. Look at how much room there is to this structure low. There is absolutely all this room here, meaning price might want to gravitate down here. We be tagged in, but sometimes price lingers to the structural low here. We'd obviously be then taken out. So I hope you guys kind of understand what I meant there, that because of this high and because of the rules that I trade, my entry would be roughly here. But the fact that the structural low and the space between all of here, all this, we could be likely taken out, and therefore I'm not gonna set an entry, but you know, I do wanna sort of box off this area because it is an interesting area to sort of look at. That, yeah, the entry and that structural low are close, but the fact that my stops don't cover it, and there's no way that I'm gonna extend my stop, because then that plays with the rules that I've set for my trading plan. So, you know, this is a trade that, you know, I would let go, and doesn't matter if it continues or not. That's not really the point. It's the fact that I'm sticking to my plan, and I know that I don't want to take the trade for whatever reason. And price just does continue up, but I'd say with our entry and with our stop loss criteria, we would actually be taken out there. So that's just a good lesson. I hope you understand that, okay, even if it does go up, even if it does make a win, the fact that I stuck to my trading plan and to my rules, that's an overall win in itself. I am now having some confidence that, you know, we're moving up, coming back up, sort of like this short-term buying pressure here. Now, this is actually already another potential entry where we would have our stop here. Let me just reevaluate, see what is going on here. This high is 1.5, so it'll be 3.5. 12 pip stop loss for my retest. And again, I don't want to take it just because it is quite close to this low. What tends to happen again, price might want to come back and then go because it's close to this low. Obviously, maybe sometimes I will take it. Previously, you might have seen that I've been taking trades, doesn't matter if it's too close, but it's just something that I've noticed, especially with Euro Yen, constantly backtesting it and just seeing it from forward testing as well, and now understanding a little bit more about liquidity and how price does tend to gravitate to the lower end of that structural low. before it then moves to the upside. So in that case, again, I'm gonna let that one go, but you know, this would actually be a setup that I would actually take, and let's just see what happens. Okay, we've absolutely smashed down to this low, to this area here. My entry was gonna be up here. This wick has touched just before the structural low, and usually that gives us confidence that price is gonna move to the upside. Let's just look at price. We're kind of trickling to the upside now, and I want to just continue price at the moment. We've been on an uptrend. We've had this little gap and pause. Usually then this will be another entry point at this low here. But I'll tell you why I won't be taking it. It's because we had this mess before. Big difference between an ascending, strong push down, then we get on the retest. This is more high probable than, let's say, ascending, and then it chops around, then it comes down. It's because it chops around, didn't have the momentum that broke ascending structure. This is valid, this is high probability. I want to minimize trades that are these, you know, C, like B minus sort of C grade setups. I want to stick to the A star setups like this. So in that case, this is a trade that was potential, but I won't be taking. And it kind of teases you where it comes in, it comes down here a little bit, and price ends up moving to the upside. And bear in mind, I've been taking trades like this previously, but it's just by refining and continual testing and understanding how price may be moving and thinking dynamically and creatively that, you know, price isn't always the same. So therefore we got to move with how price moves as well. And I think the consistent traders who do really study the art and the science of the market will really kind of understand what I'm saying here. Price is definitely coming down, it's wicking, descending to me. It's almost like we've gone from ascending to descending. So therefore, that kind of gives me like a little inkling that the market is just going to be quite ugly. And again, this is a period where you're going to be sitting on your hands. Volatile candle. You're going to be sitting in your hands and just kind of be frustrated, like, the market's not giving me anything. But, you know, capital preservation. Literally, as I'm watching the market, I want to reiterate again, there's going to be setups on the 15 minute, on the 5 minute, on the 1 minute, on the 1 second that people are going to be banking. But as I'm trading and I'm sticking to my plan, to my rules, to my strategy, to my system, there's no setup here for me. I'm looking for, I'm trading with the trend. I'm looking for momentum right now. Yeah, this is moving to the upside. Maybe people taking buys on the lower time frame, again, will be making money. But I'm trading with momentum. I'm looking for momentum. I'm not looking for this choppy price action where it's kind of just descending upwards. Again, it's where it's ascending to the upside. All I'm waiting for, since this is giving me reversal signs, I'm waiting for that ascending and push down, strong push down. All right, what's interesting here? Right, now something I do want to point out is these two tweezer tops. I was tempted to go on the 4 hour here, but I'm not, because I know I didn't do that on my other previous videos. Maybe we'll get into a bit of multi-time frame analysis as we go along the months. But one thing I want to point out is, I know I don't really trade patterns anymore, but this is very interesting. Getting that sort of extension above all this ascending channel. So what I mean by that is we've got this ascending channel, and then we have that smaller ascending channel. I find these trades to be really, really good. Even better, Euro pairs are great at them. It's like I've said before, sometimes we'll get an ascending, a push out, and even a smaller, a tighter ascending that gives me a lot of high probability vibes to then push to the downside. So I'm actually really interested to see how price forms in this little section here. See, right now we're uptrend, this downtrend. Okay, there's two things that I want to point out right now. Okay, on the lower time frame, this would have been a glorious entry. I've never used this word, glorious. On the 1 hour time frame, which is what we're trading, this is also an incredible entry point for a retest. And because of the things I've stated before, where we've had the ascending, then an extension of the ascending, and then we've got these two tweezer tops, and then, you know, just understanding how price has now sort of come back here, kind of gives me a little bit of a direction that price could be moving to the downside. I am going to set an entry at this inside bar, and then we're taking a short, this low, 20, so that's actually just 200. 2 pips below, 12 pips stop loss, it's a retest. Let's see what happens. Now, these little like sort of one candle confirmation at the top or at the low of an ascending or descending. Obviously we don't know when this ends, but like it's sort of a hindsight thing where it's the origin of the leg. This is where it's most probable. And again, we've got this wick. This candle is really ugly. You know, if I saw this live, obviously I'll feel a bit like, oh, let's just see what happens then. But obviously we're wicked in now, and it's always trades that kind of just wick you in are actually the ones that tend to like move, especially again at the top or at the bottom of an ascending descending structure origin. So let's just move price forward. We would still be at 1% risk, and that is sort of the downside of this strategy, but over time it is profitable. If you're finding that on average all your trades are making, let's say 3%, 4%, then you can set a profit target for that and then just deal with your own emotions if it goes on to make 10%, etc, etc. But again, just everyone trades differently. We're just moving if it hits the low or not. This is very common Euro yen behavior. It's literally gone back and tapped into our entry point. A lot of people trading this who stick to this style would definitely be freaking out, and we have now locked in 1.75%. Let's put that in there. Again, now we just wait if we break this low or get taken out. Break this low, move on stops. 3.5% up in. And this is actually giving me descending vibes. Also, oh, we've actually have to lock in our profit now. I'm getting too trigger happy. Okay. We are literally taken out on this area here. I got distracted with looking at the descending channel that's forming. Would you guys agree that this is very descending behavior? And just looking at these wick formations here, lots of wicks, lots of confidence that price no longer has momentum to the downside, but potentially to the upside. This could be an entry point here. Let's set an order for a long at this high. That would be 5.9. 12 pip stop loss. Oh yeah, just quickly going back to this. We made 4.67%. Pretty solid trade and lots to learn from that one. But I just wanted to, I'm pretty zoned in on now because this is obviously, I'm backtesting this live with you guys. So I'm pretty zoned in to see kind of if we come back down and go. Okay, looks like price, now that price is doing this, what I'm curious is if we're actually gonna get, you know, the flag formation. I'm actually gonna delete this and I'm gonna focus on that flag formation. I am really liking this. The fact that it's taking a few good hours for it to form. Let's just see if we get that retrace, and we do, and we get a wick. This is good. I'm liking how this sets up. 15 pip stop loss for a flag. Let's see what happens. We only move our stop if we break this high up here. And we do, and this is looking solid. Let us move our stop. So we're just above break even now, and price is moving to the upside. Let's see if we get another flag formation. Again, a bit of rejection wicks here, and we just move our stop to the low of this inside bar. Currently locked in 3.66%. I'm not going to be taking a scale in just because we've had wicks. Oh, and we get taken out. Okay, 3.66%, solid trade. And price is looking very clean at the moment. So you see how we had all this crap here? You know, patience does pay off. Now I want to know if we're going to get a longer correction to move to the upside, or if we're just going to start correcting, then move to the downside. Like I said, the most probable time to get involved is at the origin of a leg rather than much later into the move. We had this low, wicks, high, broke it, wick again, let's just keep going. Broke it, then retraced. Broke it, then retraced again. Descending behavior here. Also, just from a liquidity standpoint, this is a very, very interesting area to look at, by the way. Lots of inefficiency being filled here. And then we again broke, retrace. Currently our low is here, our high is up here. Tapping into the zone, I want to know what's happening here. We're squeezing, we're getting more wicks. Let's see what happens. Right, so we've got a low here. We're tapping into the zone, we're getting a lot of wicks. Price is also slowing down. Filled up all this inefficiency in this area here. Inefficiency here, inefficiency here, inefficiency here. We've broke this high. We've got a low here. Our entry would be at this inside bar level. That inside bar is at 987, so we'll be at 07, 12 pip stop loss. This is nice because it covers the stop loss covers the zone as well. So let's see if we get triggered in, and we do. That's a really, scary looking candle. But hey, look, we're in, and we are already at just nearly break even. Oh, and we're getting pretty ugly wicks here. We're also approaching the end of the month. It's actually been quite a nice month, and in terms of the setups are pretty clean looking. Let's see if we get a flag actually. Okay, with how this is looking, just because of this volatility as well, this is actually where I do see price at least trickling to this area just to fill inefficiency. We've got a bit of inefficient price here. Oh, let me box it off for you guys so you can see. Now this is sort of where you'll see my tweaks in terms of how I am incorporating SMC, institutional style trading, because usually I would get on a flag for a scale in, even though we'd be running at like whatever 7%, only got 1% locked in. This is why I also would rather just manage rather than take an entry. But if we get a flag, me knowing that we've got inefficiency to fill, I would likely not take that flag, because usually I would prefer for price to tap in and fill inefficiency first. I feel like that is more favorable, especially after a strong move like this, because right now we would actually be in. We'd be in on a scale in, but then we'd also be out, and yeah, price does always tend to gravitate to fill inefficiency one way or the other. Anyways, we're still waiting for this high to be broken to see if we can lock in some profit. Price is tapping in that region again, and we're just gonna have to, I want to see how this trade ends, so we're gonna continue to see if we do, and we did. So we are moving our profit to here, just this region here. I'm gonna delete this now. Hopefully you guys kind of learned the importance of imbalance and just noting it and how you can add that to your trading. You can see how I use it as a confluence and just that extra layer not so much entry, but just as a confluence and that extra layer. Let's see if we, again, if we either break the highs and we do. But yeah, I was gonna say if we break the highs or if we break the lows and get taken out. We are now here. Again, do we break the highs or do we get taken out? And we get taken out for, let's have a look. We get taken out for 7.26%. Alright guys, so now I wanna just zoom out and let's go over the trades that we've been taking. This was actually a 100% strike rate month. We took 5 trades, 5 wins. You can see with this strategy that you'll take less trades, but it tends to be a lot more filtered, especially if you're sticking to your plan. Because, you know, trades in this region are very tempting. But if you can know you're in a corrective market, you can really refine your trades. Obviously, you could bank more if you were a bit more aggressive, or you could bank less, but I find that sweet spot for me just being patient and waiting. Alright guys, so that pretty much sums up this video. Just thought I'd actually pop this on here as it's the end of the video. I know the real ones stay till the end, but I know these videos get long, you know, they can be boring, my voice might be annoying. You might be thinking, oh, why on earth didn't she take that trade, or why on earth did she take that trade? But I think it's all part of learning, and we never just get good at something because we took a magic pill or because we watched one video. You know, it does take time and effort and focus and energy. And I remember, you know, just thought I'd share a personal story that, like, at the start of my journey, I'd actually be watching live videos that would last 3 hours, 3-4 hours every week. Because now I know a lot of communities, they have pre-recorded ones, and then they trim it down and it's just so seamless. But I would have to log in after uni, after working my part-time job, absolutely brain dead and tired, having a coffee at, like, I don't know, 8 p.m. when the webinar was about to start, and having to learn live, and then having to, like, really struggle with focus. Again, you know what you want at the end of the day, and it's to learn that skill to become the asset. So it does take time. And I mean, that's exactly why I created this YouTube channel, because to just show you guys and to share those kind of stories that there is a bit of struggle when you are on your journey. But I'm telling you, the struggle is so worth it. But real talk guys, I know these backtesting videos, they can be quite long. Even for me to edit them, they're long. For me to film, they're long. But we do it because there's value in it, and I want you guys to learn. I want you guys to know my thought process and what I see when I'm looking at the markets. And, you know, those who win are going to be the ones who are able to invest their time and energy and their focus to learn this skill. Like I said, it's not for everyone. And yeah, I just wanted to kind of point that out and share that story, because I just think about, like, people always want it quick. We're literally in the generation where everyone wants to learn it quick, or they'd rather pay someone to do something for them than them actually doing it and getting that satisfaction that, you know, they did it, they learned that skill, they put that time and effort in. And I'm seeing, like, these stupid, like, ads on Instagram and Facebook of just this other company, and it's just promoting something that is just, like, I don't know, but that's a story for another day. I'll end this here now. Anyways, I just wanted to, like, kind of drop that in the end of this video. If you made it to the end of this video, you're a real one. I honestly appreciate you. And if you did, drop an emoji. I don't know, maybe let's do sweet corn, because I like sweet corn. Yeah, drop in a sweet corn emoji if you made it to the end of this video and listened through all of that. I really appreciate you guys for watching, and I'll see you guys in the next one. Take care.